Hello, Stephen Cruz here. Really excited to be here on a Monday evening at 7:30 to answer any questions you might have or to our mortgage Q&A. I have to say I really enjoy doing these events, and if you have any questions, please feel free to contact me through Facebook or LinkedIn, Twitter, with your questions, and I'm happy to answer any of the questions you might have related to mortgages and financing, all that sort of stuff. So over this last week, we had a couple of questions from some clients who contacted me direct and wanted to know a little bit about credit. And oh, by the way, before I get into that, I want to say that I'm excited to move this from Tuesdays to Mondays. Tuesdays I have a bit of a conflict. I play squash on Tuesday nights, and I forgot about that over the summer. And now that squash season is back on, I'm kind of committed to my team and playing, so I had to move it to Monday. But my videos are always here, and you can always catch me. So if you can't come on Monday nights to watch, then please feel free to join us, watch the replay, or join us another day. So what I'd like to get into today is talk a little bit about credit and how you can maintain and improve your credit, and some tricks and techniques, etc., for maintaining the credit you have. So one of the main questions people always ask about are beacon scores. They want to know what their beacon score is. What's a good beacon score? What's a bad beacon score? And really, the beacon scores can range anywhere from 350 at the low all the way up to 850 at the high. I have to say, honestly, I haven't seen too many 350s. Just this last summer, I had one client who had the highest beacon score I've ever seen, and that was 847. So that was a fantastically high beacon score. So a good beacon score is anything over 620. If you want to purchase a house and get qualified for the financing, you have to have a minimum beacon score of 600. Anything under 600, if you want to get financing at a big bank or a credit union or something like that, you need a minimum beacon score of 600, because otherwise you can't get the mortgage insured. None of the insurers will insure a mortgage with a beacon score of under 600. But a good beacon score is 620 or higher. To qualify for more programs that are available to purchasers, like flex down programs or other related mortgage financing programs, you need a beacon score of 680 or above. And so 680 is really a standard for very good beacon score. And so if you wanted a very good beacon score, let's say 680 or above, anything over 720 is considered excellent, and really 720 is the gauge. Above 720 is really considered excellent. 845 is superior, but there isn't really any rating for that. As long as your beacon score is over 720, it's just fantastic, and that's great. So how do you maintain your beacon score, or how do you make sure that you have a good beacon score? So there's really a couple of key factors. First factor is that you need to make sure that you're making your minimum payments on time all the time. So if you have a credit card or well, specifically credit card, and there's a $3 balance on there, you have to pay it off. You have to make the minimum payment, which is usually $10, but you want to pay that off. You can't have a $3 balance and say, oh, I'll pay that next month, and just leave the $3 balance. Because if you leave a $3 balance or a $10 balance or a $100 balance, you don't make the payment that month, it's considered a breach of contract, because you're expected to, and you've committed to making minimum payments every time on your credit card when you sign that application. So it'll show up on the credit bureau as a 1 month late payment, and that can substantially affect your credit, drop your score quite a bit. The more recently you have a late payment, that will also drop your beacon score. So if you want to try and maintain good payments or a good credit, you want to make your minimum payment every single time. You do not have to pay off your credit cards. That does not necessarily give you a great score. But making your minimum payments every time, especially on revolving debt. So credit cards, lines of credit are considered revolving debt because you can draw them up and pay them off, draw them up, pay them off. If you have an installment loan, so any kind of payment plan reporting on the credit bureau, you must make the minimum payments. Typically, they take them out of your bank account all the time, so it's fairly easy to make those. But if you miss a payment on those for whatever reason, that substantially affects your credit score. So it's really important for you to make those minimum payments on those loans and monthly obligations as much as you can. The other aspect of credit is the balances you have on your credit cards in relation to the limits you have. So if you have, let's say you only owe $1,000 in credit all in, but your limits of all your credit cards only reach up to $1,000, then even though you only owe a little bit of money, that is affecting your credit score because your utilization, or the amount of credit you're utilizing, is 100%. And so 100% is not good. Usually, the less percentage you have of credit you're utilizing, the better your beacon score. And really, if you utilize 0, you get the best score. But not very many of us utilize 0 every month. But you know, if you can utilize 75% of your outstanding limits or less, then that's usually giving you optimum credit, and it's improving your credit score to the maximum. So let's say you owe $1,000 and you have $10,000 in overall limits. Your utilization now is only 10% of the 10,000 instead of 100%. So it's not the amount of money you owe that's really important, but it's the amount of money you owe in comparison to your overall credit limits. And so that's another thing that that affects your score. Clients always ask me about their inquiries. So how do inquiries affect your credit? And the more inquiries you have, the lower your credit score. And it's not really a one-to-one relationship. Sometimes, like if you get an inquiry today and another one tomorrow, likely a new inquiry will bring your beacon score down by 3 to 5 points, just because there's a recent inquiry. But it's not really a set number per se based upon inquiries. And sometimes you might be shopping for a car loan or something, and you'll see that, or a credit, someone checking your credit will see, oh, you went to Scotiabank and you went to BMO and you went to RBC, or the dealer went to these different places to shop for a car loan for you, and every single time it went there, there was a new inquiry. And so a lot of underwriters, when we review the credit, will say, okay, you were shopping for a car. I see you have a new car. It's a 2015 model. In 2015, there's 5 inquiries here within a 3 or 4 day span, and it makes sense. It really only looks to be one. And the credit Equifax and TransUnion, the two credit companies, they're getting smarter at recognizing that you're doing some shopping and kind of lumping those all in together. So that the inquiries do affect you, but it depends on what the inquiry is, how often you're making inquiries, and but it does make a small effect. So you don't want to be seeking credit. If you make a couple of inquiries every single month for the last year, that will affect your score a lot more than making 1 or 2 inquiries over the last year instead of 1 or 2 a month. So that's another thing that affects your credit. Sometimes people will have disputes with different companies, like your cell phone company, or sometimes your cable company, or a store who gave you a loan or whatever. And if you have a dispute with those companies, and let's say it gets to a dispute where you've stopped making your payments and you're now in arrears on your payments, and they send that debt to a collection agency. One of the things that people do that can affect your credit is to pay the collection agency instead of paying the original creditor. So let's say you bought some furniture at ABC Company and they gave you some deferred credit card, and then you weren't happy with the furniture and you returned it, or you weren't happy with it, and so you decided not to pay for it because there was a dispute and they wouldn't take it back or whatever, some kind of dispute. Anyway, if that ABC Furniture Company gives the debt that they have for you to a credit company, then a collection company, then what happens is that the collection company only pays for that debt. So they'll pay 50 cents on the dollar or 75 cents or 25 cents or whatever. So they're not paying the whole amount that is owed to ABC Furniture Company. And then they're going to try, the collection company is going to try and collect as much as possible, and whatever difference between what they paid and what they collect is their profit. And so when you do that, you'll notice that the collection company puts something on your credit bureau so that it makes it harder for you to go out and get more credit, and then it encourages you to go and contact them to try and resolve this issue. When you call them direct and you negotiate a price, then the original company's not getting all their money back. And so it's not likely you're going to have this collection item that's on your credit bureau removed. However, if you go back to the company you had the original dispute with, so you go back to ABC Furniture Company and you say to them, you know what, I want to fix this, I want to resolve this problem, I owe you, $1,200, please, I'd like to pay it. So sometimes they don't want to take your money. But if you highly encourage them to take them, so you're persuasive and kind, and you say, I really want to pay this, I want to make this right. If you pay them the whole amount, then once you've done that, you can ask them to have the collection agency remove the item from the credit bureau, because now they're paid in full, and sometimes you can persuade the ABC Furniture Company or whatever other company you're dealing with to remove the item. And having a collection item removed from your credit substantially improves your credit versus paying a collection company and then have them saying, oh, pay to zero. Because when you pay the collection agency, that's what they report on the credit bureau. They report that you have a debt and it's paid to zero. So it improves your credit, but not as much as if you can have it removed entirely, so as if it was never there before. And so that is a big tip that many clients have utilized to improve their credit substantially within a month by going back to the people that they owed money to, having that paid directly to them, and then having the collection item removed. And I'm sure lots of credit collection companies don't want me to tell you that, because that's how they make money, is by collecting money from you. But that is a strategy that you can use to improve your credit substantially. Some of the other things that you can do is review your credit every once in a while. Sometimes there's items on your credit that aren't updated. So I've often seen people who have a vehicle loan for like ABC credit card company or Ford credit or whatever, something like that, a auto finance loan. And then they'll be 3 years in to a 5-year loan. They return their vehicle, as in they sell it. They sell the vehicle to the car company, and then the company buys them another car. Or they sell them another car. So they'll upgrade vehicles. They'll trade in the old car. They had a loan on the old car. The loan will be paid off, and then they'll set up a new loan. But that old loan will show a balance and payment. And usually, as an underwriter, we look at the credit bureau, and we can see when the date of last activity is on the credit bureau, and it'll say, your last activity was 3 years ago in August, so that's likely the last payment you made. It still shows you're making payments of $325 or whatever, and it still shows a balance of $5,000 or $6,000 or something. So those items affect your credit because it goes towards your utilization. And so if you have something like that on your credit bureau, then you can contact Equifax directly and have them update that information so that it's reflected as zero. And so there's a simple form online. When you go to equifax.ca, you can fill in a form. There are a couple of items you need from your actual credit bureau inquiry, and there's some specific numbers that represent you on the credit bureau, and so they want you to fill that in. So if you're applying for credit, you can ask the person who pulled your credit to give you those specific numbers. And if you haven't applied, then you can pull your own credit and get those numbers, so you can add them to the form so that they can update this properly for you. But that's something you can do. You can update items. Another thing that you can update is your address information. The credit bureau really just gets your address details when you apply for a loan or a credit card. So when you fill in an application for a loan or credit card, that information is given to the bank. Then the bank or credit company or whatever sends that information to Equifax, and Equifax will then use the information as up-to-date information. And if your address that they have on file as your current address is different than the one that you're showing on the new application, then they'll put this new address in as your current address, and they'll show the dates that they had on record for your previous address. And so if you've changed your address or you've done something, changed some information, then you can contact Equifax and update that information using this form that you can find on equifax.ca. Other things that people have done in the past that either slow down the process of financing, and it doesn't affect their credit per se, but it can slow down the process, is if you had a credit card stolen or your ID stolen, a lot of people will call the credit bureau to put an alert on their credit bureau for these stolen items. And I think that's a great idea. So if you had your wallet stolen and you have all your credit cards in there, you want to put an alert so that whenever a new inquiry is made on the credit bureau, they usually have to call you direct to get your permission to proceed with the application. So that protects you from someone trying to steal your identity and take a loan application. However, what happens is that someone will put that on there. One of my clients has put that on in the past 4 or 5 years ago. Their wallet was stolen. Nothing happened. Nothing is going forward. And then suddenly they need to get some loan, a loan or a mortgage or something now. And that alert is still on the credit bureau. And it's fine to have the alert as long as your phone number is the same, because you would have told the credit bureau back then what your phone number was. But if you change your phone number, then when you're applying for a loan from a credit card company or a mortgage for a mortgage company, that mortgage company will call that phone number that you listed on the credit bureau as being yours. And if it doesn't go to you, then they can't get a hold of you and they can't give you credit. So it's really important to keep that information up to date if you do in fact put an alert on your credit bureau. You can either have the alert removed after a year once you're comfortable that everything's okay, but make sure that the phone numbers are up to date when you have something like that. So in review, the key items for your credit: make your payments on time all the time. Really important. That's the number one thing for me to tell you. Make your payments on time all the time. If you do that, you're going to have good credit. Don't utilize your credit cards more than 75% of the total limit. So if you're getting close to the limits, then you want to pay them down, or you want to try and maintain a lower credit balance compared to the limits you have outstanding. And then the third item is not doing excessive credit bureau inquiries, but making sure that you're not constantly going to different places for different credit all the time, because that can substantially affect your credit in total. So those are the main things that you have to think about when you maintain your credit. And I give you a big tip about the collection agencies that I'm sure they're not going to like. Let me see if there are any other questions that I have from anyone who is watching now. I don't see any questions from this, so I will sign off. And again, I love doing these, and I love to answer questions from my clients. Anyone who is watching, and you're welcome to come back and watch and review these videos anytime. So until next week, we'll see you again, same time, same place, Monday, 1 week from now at 7:30 p.m. And have a fantastic night, and we'll see you next week. Take care.